Hey guys, welcome back. Thanks for watching the show. This is Everything Money. We talk about stocks, real estate, financials, businesses, growing businesses, life, mindset, all of it, Paul. Really, you're the catalyst. I asked you the questions, you and Mo, and today we're talking about Twitter. I don't actively use Twitter. I do go to Twitter, Mo, if I need news, like quick, what's going on. Twitter, for me, is a great avenue. But we're going to use our software, look at the financials of Twitter, try and separate the business that is Twitter from the stock price and see if there is a juxtaposition in that maybe we could buy this and it'll grow, or if it's overpriced, be careful. But I present to you Paul Gabriel.
So I have an interesting anecdotal story about Twitter, which we'll get into, but please follow us on Instagram. It helps us out a lot. So guys, Twitter is a $47.5 billion company. Look at this 5-year PE, Seth. 184.
Oh boy.
1 year PE of 123. We want this 184 to be below 22.5.
Yes. Yeah, that's not good.
Another crappy thing, that low return on invested capital. Tech businesses tend to have higher returns on invested capital. This is 4.9%. We want it greater than 9.
Yeah, what are they doing?
I don't know.
I know Facebook just pummels me with like ads, but does Twitter do the same thing?
I don't know.
I think it's easier for Twitter to hide those ads a little bit better, don't you think?
Yeah, I don't know. I don't use Twitter. I'm not
We
sure.
tried to use Twitter for advertising our fantasy football game, dynasty.com. Check it out. It did terrible. It was not effective at all.
But even then, you would think that they would accidentally come in higher with a higher return on invested capital.
Who knows? But look at this.
Shocking.
5-year average free cash flow of 600, but last year they only did 270. Immediate red flag to me. If you saw Facebook's, their 5-year free cash flow was well below last year's free cash flow. So I'm wondering immediately what's going on with Twitter. All right, income statement. 2.46 billion to 4.45 billion.
Okay.
It's a check mark, but I'm not very excited about it.
Okay.
Net income.
Yeah, profit growth is pillar number 4, folks.
They went from losing 450 million to making 385 million.
Twitter was losing money as of 5 years ago.
Oh, 1,000%.
Okay, keep going.
Shares outstanding, 730 to 796. X there as well.
Uh-oh.
So guys, we made this software because our users asked us how can they get the data we were using every day to analyze. So we created the software. What you get with it is the mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, exclusive daily content, a bunch of other stuff, but one of the most important, Discord community. Over 6,300 people have access to this. You can go in the community, talk to people in a very organized way about all your investment ideas. And there are from very smart people in that community, way better than investors than me, amazing day traders. All this, guys, for measly 90 cents per day. That's less than a crappy cup of coffee. If you are serious about money and investing in your financial future, this will be the best investment you make in your lifetime. And I'm not just saying that. 90 cents a day to get all of this when our competitors are $200, $235 a month. Go to the link below, go to everythingmoney.com, sign up. It's less than 90 cents a day. I don't understand why you wouldn't do it.
Pillar number 6 is total long-term liabilities divided by 5-year free cash flow under 5 for Twitter.
So we look at the 5-year free cash flow. Let's call it 600 million. Multiply by 5, we want less than $3 billion in total long-term liabilities. Why is that? Companies that have less debt are more likely to stick around. So we go to the balance sheet, scroll to the bottom, 5.35. So that's an X, okay? And don't forget, last year's free cash flow was a lot lower. So it's definitely looking worse as it is. Let's go to the cash flow statement.
Free cash flow is pillar number 7, babies.
So we added this free cash flow line that nobody else really has.
That's helpful.
Yes, very helpful because free cash flow is cash from operations less your capital expenditures. And it's the money they use to pay dividends, buy back shares, pay down debt, and make acquisitions. 5 years ago, they did 574 million. Last year, they did 270. I do not like that trend.
Uh-oh.
But so that's an X. And then to get our value, we take their 5-year free cash flow of 600 million, multiply it by 20, and we have a $12 billion market cap. So we want the market cap of the company under 12 billion.
Oh my Lord.
Uncle Seth, what's the market cap?
47 billion.
Which is 4 times more. That's an X. And it makes sense. The company's overpriced. If you go to our 8 pillars tab, look at this, all X's. Now, can I get my anecdote?
Please
there was
do.
a tech guy who, I'm not gonna lie, I can't stand him. If he's watching the video, he knows who he is. Back in 2013 and 14, he kept telling me, Twitter is the future. They're growing so much. They are growing so much. The stock was at I remember it was at $53 a share when he told me this. It's currently at $59 a share. All this growth it's had. And look at this. The stock has gone absolutely nowhere.
This is AT&T over the last 30 years.
Look at the last 5 years. Back in 2013, they had $448 million in revenue. Now they have almost 10 times that amount.
10x'd.
Look at their profit. Their profit went from losing 100 million to making 384.
No way.
And the stock is even. So guys, over long periods of time, stocks will go towards what's behind them, their revenue and profit. He insisted, no, Paul, you don't get it.
You don't,
It's about
Paul.
users. It's about growth. It's all that stuff. Now let's go see. How many users? User growth for Twitter.
Mo, how is Twitter going to reinvent itself?
I don't know. Statista, they have pretty good counts on here, and I'm comparing them to.
What's it saying? So what do they have in 2013?
In 2013, this only goes to 2017.
Oh.
Let me find another one for you.
What do you got, Paul?
So that's important
right
because
here.
we want to look at
2013, 204 million users.
Now they have.
Now they have. Let me go to this one. Hold on. Their count is a little bit off. 206 million, it says.
So it's basically even.
Basically even. But if you look, let's compare it to Facebook. 2013, call it a billion.
Now they have
3 billion.
Okay. So guys, even staying the same, look at their user growth. Their user growth stayed the same. The stock's the same. Their profit's up. Their revenue's up 9 times. 9 times revenue growth. That's 800%. Do the math. That's 9 times revenue growth, and the stock is still the same. Why? Because what matters is revenue and profit over long periods of time. That's what matters. If you look at any company in history, if I told you that a company is selling for exactly what it's worth today, and 10 years from now, the profit's going to be triple, I would tell you the stock will probably be triple.
Sounds a lot like Tesla.
Yeah. You said, how does Twitter reinvent themselves before I cut you off?
Yeah.
Shut down?
I don't know.
I'm kidding.
I literally have no idea.
By the way, I know a lot of people who do Twitter for news. That is a very valuable part of Twitter.
So
People like
But
the
I could
immediate
easily use
news.
anything else. I mean, it's
By the way,
just,
when things were happening live, like people would literally be like, "Oh my God, you hear what just happened?" Like literally minutes after it happened, people are tweeting.
But there's
that is
also
important.
there's also the downside of that is people tweet literally anything to be first, including a ton of wrong material.
As opposed to being right, yeah.
Correct. So.
I don't know, are people trading this in the Bid-Ask Nation?
So
Mo?
I haven't heard a lot of people that do trade this. I mean, you can see that you can catch some good trends here and there, but to me, I would look at this thing from a day-to-day perspective instead. And right now, let's see, you're fighting a lot of moving averages. That's the tough part for you. And you guys know, if you're fighting moving averages, what do you need? You need a ton of volume. They do have consistent volume, but I think they're going to need to have a lot more big volume days over their average moving volume to get this thing going through the 200, 25, 100, and 50-day moving average. But this trend, it's looking okay. If you're watching this video and you want to throw it on your watch list, maybe keep an eye on this one. Maybe keep an eye, throw a tracker share on there. Just make sure that you get enough volume to push through those 4 moving averages, because those are going to be a very big hurdle for you.
Guys, I did the stock analyzer tool.
What are you showing?
This is Twitter. I'm putting 6, 8, 10% revenue growth, share change, all these assumptions. Look at these PEs. The problem is the PE and the price of free cash flow is dropping big time. Got to drop by 90% almost. Hit the analyze button. The company's currently at $60.
Oh my.
85. And people are like, "You're crazy." I'm not crazy. I just look at it going, it's just numbers, guys. Every investment is the present value of all future cash flow. And profit margin drives off revenue is going to drive the profit. Unless Twitter, let's do this. Let's change some things. Let's say their revenue growth is, they reinvent themselves and their profit margin jumps up. Okay, I'm going to change these things. It's still insane. It still needs to drop by 60%. It's just math, guys. It's just math.
Yeah, I like when you say that.
At the end of the day, it's just math.
What do you think, Paul? That's our take?
That's our take.
Yeah, stay away from Twitter.
That's my opinion. Unless you think Twitter is going to all of a sudden,
Be the best thing ever.
yep, then stay away.
Join the Everything Money community. You can talk about this in our Discord chat. And we're giving away a Tesla at 100,000 subscribers, which is happening very soon. The growth of this channel is better than every other channel you're watching, I assure you, besides Graham Stephan. But I mean, dear God. But yeah, so follow a thumbs up and join the train that's moving forward. Paul, it's an incredible journey we're going on. Choo-choo Magoo. See you guys. Love you.